Hello and welcome to another Crack the Sky productions of our top fives ASX Exchange Traded Funds Daily Horizon View, and today is the 14th of the 3rd, 2019. Bull market was down quite considerably today, 1.22%, closed out at 2666.8. Information technology, energies, minerals, industries all up a little. Utilities and consumer discretionary copped a bit of a whack today. We can see that in metals are up, and oil and other petroleum products are up as well. So first up we had QAG, then we had 000 or 000, then we had Cure, then we had WEMG, then we had RBTZ. So QAG is the beta shares agricultural ETF, gives you access to commodity basket, that's currency hedge, and that's synthetic. Then we had the beta shares crude oil index, 000, and that's a currency hedge synthetic ETF as well. So if you're looking to get direct exposure to oil, that's one way to do it, through an ETF. Up after that we had Cure. Cure is the ETFs S&P Biotech, and that one tracks the S&P Biotechnology Select Industry Index. Followed by WEMG. WEMG is the State Street Spider S&P Emerging Markets Fund. So that'll give you access to emerging markets globally, if that's what you're looking for. We had RBTZ, which is our beta shares global robotics and artificial intelligence ETF. So if you're looking to invest in that side of things, that's one option. There's a couple of others as well on the market. So QAG had quite a large rise today, so 4.9%. Our top 5 percentage falls. We had China New, then we had China, the VanEck Vector MSCI 300 ETF, so good negativity around China. Then we had MNRS, which is our beta shares global gold miners ETF. So gold's obviously not the flavour of the month, and that's followed up by another gold ETF, which is GQX, which is the VanEck Vectors Gold Miners ETF. And then we had, up after that, was ETP MAG. So MAG, that tracks a physical silver, and the physical silver is held in the HSBC Bank in the United States. So China and metals are down. So the China New ETF, that was down 4.25%, which is a reasonable whack for the ETFs. So our top $5 rises. For the top 5 today, we had IVV, IHVV, SPY, VTS, IJH. As most people know, the IVV is the iShares S&P 500 ETF. That's one of the big ones, 2.8 billion in that one. IHVV, which is the Australian dollar hedge variant of the iShares S&P 500. Then we had SPY, which is the State Street Spider S&P 500 ETF. Followed up by VTS, which is the Vanguard US Total Market ETF, and that's another big one as well. Sort of doing 2.8 and $3 billion in that one. After that, we had IJH. Once again, looking at the American market, that one tracks the S&P Mid Cap 400. So looking at mid cap stocks in the US. So definitely American focused on that screen. So our top $5 falls. Expecting to see a few from the top percentage fall page as well. We had CETF, which was up on the top percentage falls as well. That's our VanEck Vectors China AMC SCI 300 ETF, so tracking the largest companies on the China A share market. And we had IKO, so that's our South Korean ETF issued by iShares. Up after that we had ILB, so ILB is a government inflation ETF, so that invests primarily in investment grade fixed income securities from the federal government and state governments in Australia, so looking to get a little bit of higher return on your cash and having it in the bank. That's an option. Might not necessarily be the best. So another China focused ETF, so China New, which is a VanEck Vectors China New Economy ETF. And up after that we had our gold miners, which is GDX, the VanEck Gold Miners ETF. So China, Asia and gold, and our top $5 falls today. So for top 5 number of trades, we have IVV, SLF, VGE, VEU, VGS. So as we're probably relatively familiar with, IVV is the iShares S&P 500 ETF. 390 trades gone through, and that's one of the biggest ETFs tracking the S&P 500, so no major surprise there. SLF is the State Street Spider S&P ASX 200 listed property fund, so if you're looking for exposure to the listed property inside the top 200 in the ASX, that's an interesting one, but I think there are better returns on other ETFs if you're looking for property. VGE, which is the Vanguard FTSE Emerging Markets share ETF, transition index, an interim index, so gradually increases exposure to small capitalisation stocks on the class of Class A shares in China. So people looking or trying to get out of an exposure to the small end of town in China, into it, out of it, not quite sure, but given the fact that looks like most other people are trying to get out of those, I assume people are trying to get out of that actually. VEU, which is the Vanguard All World ex-US Share Index. So if you're looking for exposure outside America, that's the one for you, or an option. Then we had VGS, so VGS is the Vanguard MSCI Index International Shares ETF, so that one tracks MSCI World Index excluding Australia, so people looking for a bit more, trying to get out of global exposure or get into global exposure. Not a great deal of change, so nothing overly anything to worry about there anyway. So top 5 for volume, I'm assuming we're going to see some of the big guys in here, as we always do. So we had AAA, which is our Beta Shares Australia High Interest Cash ETF. Then we had ETHI, which is the Beta Shares Global Sustainability Leaders. So that's ethical investment ETF. So that tracks the Nasdaq Future Global Sustainability Leaders. There's actually quite a lot of tech names in that one. It's like a quasi tech ETF. RBTZ, that's the Beta Shares Global Robotics and Artificial Intelligence ETF. Just pretty self-explanatory. You're going to get quite a few of the big tech companies out of the States involved in that one. China new, so there's a bit of volume for that because everyone's trying to get out of China or reduce their exposure today. So that's the China new economy ETF and VanEck vectors. That one tracks the MSCI market greater China new economy index, and that's hedged to Australian dollar. Followed it up by NDQ, which is our B shares NASDAQ 100 ETF. That one's quite an interesting little ETF. That'll give you exposure to the top 100 companies on the NASDAQ, or the top tech companies. So our top 5 for value. Once again, we expect to see our major players or the big end of the town with regards to ETFs anyway. So we had lots of people looking to park money in the AAA, which is the B shares Australia High Interest Cash ETF. So $12.6 million traded today. People getting in, people getting out. Then followed up by IVV. So that was figured quite heavily in the previous 2 slides. VGE, same again. That's figured quite heavily in the previous 2 slides as well. IEM, that's the iShares MSCI Emerging Markets ETF. $2.9 million traded for that. So that gives you exposure to 29 emerging markets. So if you're looking for exposure or that type of thing. We had up last, we had VAS, which is Vanguard Australia's share index, and that one tracks the S&P ASX 300. So that one will track top 300 companies in the ASX. That's a little bit of a variation from Vanguard on what you might see most of the other companies do. They'll focus on the ASX 200. But that's definitely an interesting ETF, and that's quite a large one as well. So that'll just spread your risk a little bit more by including extra 100 companies, and quite possibly smooth out the income as well a bit more from the dividends out of that one. So as always, we're just trying to give you a bit of extra information as we go along and really spark some interest to get you guys out there and start doing some of your own research. So as always, we're trying to increase your financial literacy, and so we're able to crack our own financial sky. We're able to reach our financial goals, happiness, and stress-free. So like, subscribe if you feel inclined. Thanks. Bye.